Viewers, we welcome you to this afternoon engagement. Actually, I don't know what I'm thinking about afternoon engagement, and we are speaking about something very special in the financial sector. It may not have to be with cash. Some people think to do business, sometimes you need liquid cash, but sometimes you may have things, property, which you can use to access cash. Many times when we want to access cash from a bank, for instance, we think about land in this country, collateral, or a building. That's a physical, a permanent, a property which does not move. This afternoon we're talking about movable property and how it can work for you to access financing. And today we have in mind SMEs, women, and the youth. If you're none of those, don't worry, you can also pay attention. But if you are one of those groups, we are focusing on you this afternoon. And my guests in the studio, first I'll start with my immediate left, Miss Rashmi Pillai, who is the Executive Director, Financial Sector Deepening, Uganda. Welcome, Rashmi.
It's a pleasure being here. Thank you.
And we have Miss Jane Okot Bitek. I almost said Bitek. Langoya, Deputy Registrar General for the registries in the Uganda Registration Services Bureau. I'm having my time these terms. Our discussion tonight, this afternoon, is security interest in movable property, which is also acronymed SIMPO. So let's start with Jane. SIMPO. What are we talking about?
Thank you, Sam. We're talking about the registry that is hosted by Uganda Registration Services Bureau.
Yes.
The Uganda Registration Services Bureau is the government arm, registration arm, and alongside registration of businesses, intellectual property, and civil marriages, we also, marriages in general, and conduct civil marriages. We also have the insolvency unit, where companies that are in trouble can come and we either restructure them or liquidate them.
Okay.
SIMPO is a new product, and it's the Securities Interest in Movable Properties Act. Ordinarily, the lenders prefer land and land title for lending. This registry is to ease access to financing through lending using movable properties. That is anything that is not land, actually. Your car, your phone, your computer, your furniture. So that especially the youth, the women who usually don't have land, and the SMEs who may not be owning such property have access to finance, because it's going to be registered and give the lenders some kind of comfort. Absolutely.
Before we come to you technically, Rashmi, FSDU, and I missed the first question there to tell us, FSDU, some people may know you, some people may not know you. What do you do, and what do you have to do with this SIMPO that Jane was explaining?
Okay, thank you, Sam. So FSD Uganda, we are a Ugandan not-for-profit. We are a financial sector think and do tank. So we support the entire public sector, so regulators, MDAs, public bodies, on a next generation policy on how that solves the issues of people and businesses, how to access credit, how do you have digitization of financial services. Our entire vision is universal financial inclusion. So the second piece, we also work with the private sector. We give catalytic grants to say, will it work if you run this experiment? Will it not work? And if it didn't work, can we all learn from what didn't work? And we also produce a lot of research and data so that there is evidence-based thinking, design, and policy making.
Okay. So what do you have to do with SIMPO?
So
and SIMPO, again, is security interest in movable property. We shall break down that a little.
Yes.
But let's skip to that now.
So if you allow me, Sam, I'm going to, Madame Jane answered the what is of SIMPO. I'll answer the why this is important.
Absolutely.
So if you look at how, we talked about youth, small businesses and women, let's also understand how lending happens in the country. When you talk about access to finance, nearly 87 or 88% of all lending that happens in Uganda is based on non-movable collateral, like land or buildings or property that does not move, right? But if you say, okay, what percentage of adults have non-movable collateral? For only 47% or about of adults will say, I have property which is not movable in my own name, not in my family name, in my own name.
Okay.
And if you ask what percentage of those have land, it's only 19% will say we have some land agreement or a title deed, etc. Which means if you're a bank whose entire business model is against non-movable collateral, you will reach market saturation very quickly because there are only so many borrowers who can produce that security against the loan that you're providing.
And that's our situation in Uganda.
Yes, that is the situation. But the percentage of small businesses, women, youth who need money, access to credit to grow, to achieve their ambitions is big.
Yeah.
It's huge. So how do we match this gap? And that is exactly the problem that SIMPO addresses, and we have to commend URSB for it. Because the first step is to say, how do we have a registry for for movable collateral? You may not have land, but you might have a boda boda, you might have a car or a smartphone. All of that has value. So how do you get some kind of credit against that movable property? And that's the exact problem that the registry tries to address.
Absolutely. And we're going to go back into the background. Jane, we're coming back to you. I have movable property, as Rashmi has explained. I have a boda, I have a car, I have things. I have a phone. What does the URSB have to do with that? Link the two. Link my movable property to you. What's your role in my property?
Okay. Remember, URSB is part of government.
Absolutely.
And this is the particular role of this particular government agency is to help in the economic development. Number one, as Rashmila says, the category of people do not have access to credit that would, for instance, expand their businesses. That's the youth, the women, and the SMEs. And this registry, we don't lend money. The point is we have a registry that creates some bit of comfort to lenders because let me just backtrack a bit. When we're doing stakeholder engagement, one of the problems for microfinance was that this person will bring the car to me, my microfinance. I give them money. Then they take to about 5. By the time it's defaulted, by the time it's defaulted, nobody can get back all their money. So with this registry, the first person who gets that security will register that interest in SIMPO. So whoever else is approached, and we've sensitized them, before I tell you that I'm giving you my car, you check in the registry. Is this car already registered? So that we hope, with that kind of comfort, the interest rates are usually high because of the high risk. We hope that would reduce the interest rates a little, and people can build their businesses. For instance, the person doing Rolex on the roadside ending up with a restaurant.
Yeah,
those are the kind of things you're looking.
Absolutely.
Yes, and those are the kind of things.
So you're a kind of credit reference bureau of sorts for the banks.
Not only the banks, we've got even the individual. Because you might be, your property may be used without you maybe knowing.
Yes.
You check into the system and find it that's the case, you report to us and we sort that out. Then there's also people buying second-hand cars and those kind of things. There's a search function for the public. So when you said women, SMEs and youth, it's not only them. The lenders, I've already talked about the lenders, the general public, to give you that security that this second-hand car I'm buying has no encumbrance.
Okay.
Yeah. It's similar to a land registry. So if you have, so you know that this land belongs to Rashmi, the same way you want to know what are the other movable properties that belong. So then you have one registry that addresses these issues.
Okay. And for the point of context, we want to know, did this thing drop from heaven? Where are we coming from? Jen, I come back to you.
Okay.
How did we get here? We are speaking about movable property, and we can use it to borrow money from financial institutions. How did we get here?
Thank you, Sam. There was a Chattel Securities Act of 2014.
I heard about it, yes.
Which was never implemented. We were the implementing registry. Why did we not implement it? With the passage of time, Actually, like 2 years, it usually takes time. The parliament approves it, then there's a assent and all that. By the time it came into our hands, it had been overtaken by events. Registries worldwide that are functional are electronic, 24/7. This particular registry was manual. It had a provision that you need 21 days. You have 21 days to come and register your security. By that time, so many people, this particular person, if he's unscrupulous or she, might have lent to so many other lenders.
21 days is a long
It's
time.
a long time.
Yeah.
But with this one, you register, and the priority is as per your registration or possession. If somebody has possession, that is notice really. So we did a feasibility study.
Okay.
And the feasibility study, what came out was that this law is outdated. We need to repeal, not just amend, repeal the law completely. First of all, it's the securities identified were restrictive. We needed to widen it to include things like judgment lien, things like shares, intellectual property. You can use that as security. Then the other issue was we needed to set up a registry, a 24/7 registry. The registry before this is a book that long. You write the name, the security, and anybody wanting to search would have
They
to
will have
come
to
and
open
open
the pages. I can imagine that.
Exactly. But that is so outdated, and that's one of the things that informed this simple. We need a simple registry that is easy to register, easy to access, easy to search, and all that. And then, of course, there was the communication component. That's what came out in the feasibility study as well.
Okay.
We needed to do a lot of communication, awareness creation, and that's where we got a lot of support again from FSDU, alongside the laws.
Okay. Yes. FSDU, technically tell us, what did you do, the input, to get us here?
As I mentioned, URSB was a pioneer in thinking that we realized that access to credit is a big problem. People have movable collateral. Let us reduce the risk for the lenders by creating a registry. Okay. And as Madame Jane mentioned, they wanted to repeal the law and make it next generation to allow for electronic registration, lower the cost of even searching whether Rashmi's car is on the registry. Somebody in Karamoja can now search, and they don't need to come all the way here. So there are a lot of factors that they wanted to change, and we helped in the analysis of what needs to change, so supporting the formation of the act and the regulation and the guidance notes that followed.
Okay.
And we continue to support.
They paid for the consultant.
Okay, very nice.
They paid for workshops. Those things are...
I understand.
Yeah.
I understand.
Yes.
Now we go back to the most important thing. I understood the role of URSB and technically the role of FSDU. Coming back to me who is watching, somebody's watching, he's going to say, okay, can you break down for me the nitty-gritty basic usage of this system? How do I, where do I come in? How does it work? There's this simple question. Break that down for me. Okay. Who are the players and where do I come in? Me who's watching, the ordinary people.
Okay. There are three players in this. Number one, there's the lender.
Okay.
And this registry, you call it notice board based, because the issue is you have your transaction with the lender outside URSB. Previously, you had to register that agreement and so many other documents. Okay. But that is now not our part. You have your agreement. You agree that we are going to use Sam's car for this security for 20 million shillings. So the lender, it's the responsibility of the lender, will come to URSB and open an account, first of all in their names, or their lawyer, they give powers of attorney. The lawyers can do that. And then register that. We are interested in the parties, the interest, what interest, how much, what is the security, how much is it. We check, have you paid, you pay stamp duty for these contracts. Okay. Have you paid stamp duty to URA? Our fees, registration fees, you pay that as well. And then we have you in the system. So that if I now want to lend you, you come and tell me I have a car, I want to lend you 20 million. I go into the system and check how much is this car encumbered. If your car costs 80 million, I mean the price is 80 million, and you want an additional 20 and I see you only have 20, I can lend you with that information. Or if it's already reached, if it's 50 million and you are 20, probably I'd say no, because you need that over and above here. And then for the borrower, First of all, the law protects the borrower against what money lenders have been doing.
Yes.
They make you sign a transfer.
That you have
And
transferred the car to
sometimes,
me.
yes, and sometimes when the loan is due, you want to pay, they hide.
Yes.
Then before you know it,
it's not uncommon.
before you know it, you have no car. The law directly prohibits that. It's actually criminal. So, and money lenders are now under Bank of Uganda regulation as well.
Yes.
Tier 4, I think.
Yes.
Umrah.
So, UMRA, yes.
Humor, yes.
Yes.
Mm.
But they're also supervised by the Bank of Uganda. So, they're under this act as well, and they're strictly regulated, and they cannot do that. So, the borrower, number one, is protected. But number two, can also monitor. The public can search, which includes the borrower. Making sure the details are correct, making sure when your loan, the loan is you finish your payments and the contract is over, you can get it off the system. And if the lender is delaying, you write to us.
Okay.
You let us know, and we have access to the registry. We'll do the needful. Then the public as well. The public can search, especially we look at people buying second-hand stuff, whether it's a car, whether it's a computer phone,
Or third hand.
or third hand. But you check and make sure it's not encumbered. Somebody has not got an interest that if you defaulted, they could take you could forfeit it and they sell it off to somebody else just to get back their loan. Yeah.
Can I contest the value? My car, I'm convinced, is 20 million, and they give it a value of, let me say, 15 million on the registry. Can I contest the value? Where are my rights in as far as my property is concerned? Or is it subjective? The value they give me is what I go with. Are there any interventions in those areas?
That is slightly outside your RSB, but usually the issue is...
Indeed, people need to know that they can't come to
Yeah,
you
they
for
can't
that,
come.
really.
Thank you for that question. But the issue is lenders will usually do some kind of valuation. And that value is then the either percentage, they usually go above the value of the vehicle and then accept it as a security.
Okay.
So it's scientific, it's not...
Yeah, a discussion for another day. Yes,
But
Rashmi.
Sam, you can shop around.
Good point.
You can shop around and go to 5 banks and say, this is the security. The one that gives you the best offer is the
Yeah.
one you go with.
That's a good financial literacy tip.
Exactly.
Very good. Youth, women especially, how do I position myself then to be able to get money using the security interest in movable property initiative or arrangement? I can come to Rashmi, so we let you rest a little bit.
Okay.
So let's also discuss how does it benefit youth and women more? If you look at most non-movable property like land and buildings, you will find that most of them disproportionately are registered in the name of a man.
True.
Right? So it is head of household, your grandfather, whatever be the case, but it's largely registered in the name of men. But if you look at other productive assets like baking equipment, sewing machines, or agriculture equipment, they're used by women and youth. The productive assets can become collateral for access to credit, allowing them to then grow their business. So the legacy systems favored men. New regulations and new ways and business models can favor everyone and help in economic growth, because you need a productive labor force that includes women and youth to achieve their full potential to push the economic growth we are looking at.
Okay. Very nice. So I have my movable property, and we used to use those days of shuttles, we say cows. Do you like the example of cows? Are cows included also?
Yes.
Yes.
Okay.
Yes.
Now I have my cows, I'm a youth, I'm a woman. How do I make sure that property can be used, can be of value? The translation. What are the things I need to do for my property, which is movable, to be usable? If you get my point.
The law actually lists the nature of property that can be used, and animals and farm products are very much part of it. The only issue is that when it is perishable, the security follows the proceeds. So if you sell, that money is still part of this interest.
Repeat that point. It's a very important point. Say it slowly, even with an example.
Okay, let's say you have cows. Are cows perishable?
They can be to some extent.
Okay, you have cows, brown cows. That's what you've and you've have the unique identifier features, which you've registered as security. Then maybe something happens and you need to sell off the cows. The point is that that money for which you sell off the cows remains part of the interest. So if you default and the lender is going after you, they go after that money. You have to pay them that money. You can't say, I don't have the cows anymore. No. Where is the cows? In the money? We go for the money.
Yeah, and I'm looking at the financial institutions here. How do I keep from being defrauded? What are the stopgaps, the checks? That kind of example you gave. This person sells the car without telling the financial institution. Are they supposed to tell the financial institution? Does the law say that? And if they don't, what happens?
That would usually be part of the agreement. Because any change, and they are very, very keen on that. And they do monitoring visits to make sure their security is okay. Yeah, it's usually part of the contract.
Okay, very interesting. Let me come to Rashmi. In the big picture of the economy, let's say this simple security interest in movable property takes off and gets firm. What do you envisage can happen to this, to an economy like Uganda, if this thing is fully functional?
That is a loaded question. So let me walk backwards from what you said.
Okay.
So an economy where it has taken off, that it an equivalent of Simpo in Kenya, it has been operational for at least 4 years now. There have been close to 183,000 loans registered on the registry, and the value of the loans is today stands at $36 billion.
Wow.
That is an example of what can happen if it takes off. Now the question then is, what are the ingredients do we need to reach there? Because what URSB has done is a definitely necessary step, but does it satisfy all the sufficient conditions? It is necessary, but is it sufficient? That is the question that we should be answering. There are multiple things that need to happen on the lender side, the borrower side, and even from the regulators and the economy. So, and that is beyond URSB. Let's take the example that you gave, the cows, right? Now, if you are a new financial institution trying to lend with movable property, first you need to understand, how do I do it? How do I establish ownership of this property?
Good questions.
Right? Then what happens if the property gets destroyed or it runs away? If it's a boda boda, you ran away to the village with a boda boda, there's a cost of repossession, right? How do I find you? And you can say, actually, we can use the national ID system as eKYC. So if you go borrowing from other institutions or you do other activities, we know where to find you. But that requires a connection with the entire financial sector and NIRA, which is happening right now. But that reduces that risk, right? And then there is the entire question of, right now, the way the regulations are written, only financial institutions that are supervised by Bank of Uganda, which is tier 1 to tier 3, they are deposit taking, they can report to the credit reference bureaus that Rashmi has taken out a loan, right? But what about the entire microfinance, SACCOs, etc.? Are you borrowing from Peter to pay Paul? That is the question that the banks are going to ask you. How do we know that you are not already over indebted as an individual? You may own this smartphone, that is fine, but how do we know that you're not overly indebted? So that we need to allow for that regulation to change so that everybody who is lending goes to a CRB, you are reported, so we know what is the risk Rashmi carries. Otherwise, the interest rates are going to be very high, or you will not get a loan because we are not able to assess the risk as an institution. So those are the things that need to change. At a borrower side, we need to have more awareness, and URSB has been doing a lot of work on awareness generation, that your own productive assets, your own household assets can be an opportunity for you. And then they also need to understand how to work with financial institutions to register the collateral. I will say that there is another big issue that as a financial sector, we are working with the regulators and the industry around effective interest rates, not just interest rates. Because you see, you may get, let's say you get a bank loan at 20%, right? But are you within that, you will not get the full amount of, say, you borrowed for 100 million.
Yeah.
They will deduct the fees, you will deduct other things, plus there is stamp duty, which
Yeah.
is 1.5 to 2% of the value of the loan. So by the time you get your loan, you may have borrowed at 20%, but the effective interest rate might be significantly
I see
high.
what you mean, yeah.
Right? So those are some of the systemic issues that is beyond URSB, but it touches on the issue of access to finance and access to credit. That is what I meant by saying this is a much needed step.
Yeah.
It's a necessary intervention, but it is in of itself not sufficient.
Staying with you still, do you feel that the people who are supposed to move with URSB and the efforts you've done are moving there? How do we get them on board, perhaps?
Yes, no, so there is a willingness and we should recognize it. So the Uganda Bankers Association, other financial institutions, they want to get there. If you look at from the bank side, if you're only there are only certain type of individuals or businesses who have non-movable property like land or buildings, you have a concentration problem. You're lending, everyone's lending to the same type of individuals. You want to de-risk yourself. So there is an incentive for even lenders to understand how do we shift our business models, but also what are the risks, because these are new frontiers, new areas, and how do we mitigate those risks? Because if you look at banks, they have a responsibility to make sure they don't lose depositors' money.
True.
You're lending out depositors' money. So you have to make sure you understand the risks against a new business model before going ahead with that. Additionally, we don't have insurance against movable property.
Not yet.
Not yet. So how are banks supposed to lend? Where is the de-risking mechanism there? So that is another area that needs to be explored.
Okay, a lot of things there yet,
Yes.
but yet, as you said, the first step has been made. Jen, let's go back to you. Key question again. How do I make myself, I know it's the financial industry, but today you are the one on the receiving end, which is who was supposed to answer this question. How do I make myself, my property usable? I'm going back to that question because we have not answered it properly. I am listening, I'm thinking, okay, I have 200 goats. I need money to finish the other project. How do I'm sure not everybody with goats will qualify. How do I make myself qualify to be able for my property to be used to give me money? At that level, what do I do? If you get the point.
Of course, and this is now outside URSB, but
Education.
Education. Yeah, the lender, whichever lender, what they want from you is not your goods, but their money back.
Absolutely.
So the point is, you have to have clear husbandry practices in place that will preserve these goods to the period. And usually these loans are short, 3 months, a year. Yeah. But you have to show the lender. They'll come and look at the goods, they'll check your practices and all that. Make sure that they are impressed that you're going to keep this healthy enough to pay back. Not only the loan, but the interest as well. Yeah.
For example, if I have a phone, do they need me to have some kind of address? A house where I live, and supposing I change my rent and go to another one. I don't know. You get my point?
Yes.
Parameters that they need. Are there such things? Because I may say, maybe this thing is complicated, but I want to use my property, my phone, for instance.
So some of those things are complicated, as I say. But yes, first of all, those parameters are part of your contract, your identification. And I'd like to also mention that we are integrated with NIRA.
Okay.
So actually, when you put your ID, it checks. We just need your name, and the system checks from NIRA.
Okay.
So that is a factor. And your phone is registered using
Absolutely.
your national ID.
Yeah.
So there are integration processes happening in government as well to help some of these identification processes.
Okay. How is it on URSB? I'm still with you, Jen. How is the uptake? And I'm looking at the financial institutions now. Let's start with that.
Okay.
How are they responding to this initiative? How do you rate them?
They are. This is a personal theory, not a research theory. But usually, I think when the banks, especially the established banks, see that something is has taken off and the risk probably in the ice is not that much, they jump in. They usually jump in. So at the moment I have some statistics here. We have about 3,466 registrations, of which 24 are by banks. Then we have microfinance, there are 10. Money lenders, 18. Individuals, like I lend you money. I'm actually able to register that.
I didn't know that.
Yes, you can do that. The issue is lender.
Any lender.
Any lender. SACCO. We even have one SACCO here that has registered. Credit institutions, including, we've got registrations from outside institutions, both development banks and foreign credit institutions. They have registered because the business is here in Uganda. So we went live on, we celebrated 1 year recently.
Yeah, about a year ago.
Yes, about a year ago. So I think we are progressing well, and it's a lot of sensitization. The main issue here usually is to get the lenders comfortable that this risk is not beyond our appetite, risk appetite. Yeah.
Do you vet me when I come to the system? Sam wants to lend to Rashmi. So you know. Do you vet me, or I just come and register? What do I need to have? Or do I need to have anything, in fact?
Yes, you will have to register the details we need, your identification.
Yes.
The contract, you don't register the contract as such, but the details, the specific details. What is this? What your name, the name of the institution, your IDs. The ID of the institution would be the company registration number. Although once it opens an account, that's automatically comes on when you get into the system. What is the security that you're using? How much is the loan against that security? We've asked for interest rates. The financiers are still trying to negotiate that, but it's part of the system. Yeah.
Okay. Rashmi, for now, I don't know the demographics, the actual breakdowns of the people who have, come with the system, and on the other end of the consumers. I don't know if you have the number, maybe not. How, if we're talking about, perhaps I suspect it might be that the urban areas have faster uptake, and yet your youth, your women who don't have, these properties are more in the suburban or the rural areas. Strategically, how do we reach those people? How do we? They don't even know English. How do we reach them? What do you think?
Again, it's sorry.
It's a strategic planning issue.
Yeah. Again, it's majorly a component of sensitization. We have regional offices, Gulu, Arua, Mbarara, and Mbale, east, west, north, and south. And then central is our central office here. We are getting, our first step was to integrate with the URA, but we are getting the app that makes it possible to register through your phone.
A very key thing.
Yes, that was being worked on, and we're supposed to. I think we're integrated. We are integrated with URA, NERA. The next was to make sure we can use it on phones, because in the rural areas, that's going to be the best use of it. And then those offices are our central point, and they do outreaches as well. So we've got the regions all covered.
Okay.
Sam,
Yes.
may I add a different perspective to that?
Please go ahead.
We have to, so here's, so those who can register on the registry are lenders. I may want money, so I'm a borrower, but I cannot register unless the person who registers is the lender.
Yes.
If the lender is unwilling to accept movable collateral, I have no recourse. I may not get access to credit. So the question we should be asking is, what do we need to do to create incentives
for the lenders?
For the lenders to use movable property. Otherwise, we will have all of these systems, but they are not the right incentives for them. So then we need to figure out, how do we work with the regulator? How do we work with the insurance industry to push them, to drive them to reach people where they are and provide access to credit against what they have? Otherwise, we will end up with a registry that doesn't achieve the potential that it has.
Do the existing systems, Jen, go ahead,
maybe
please,
just to add on to that. I've said we have 24 banks, and majorly it's debentures, really, debentures. Our target is the microfinance, the money lenders, the SACCOs. We're going down to the village. There are those village banks. Every day you give money to
VSLs.
Yes.
VSLs.
Those are our target group. And those ones, there's no way they're going to look for land all the time. These are the basic movable property lenders. Yeah. And that's where our major sensitization actually takes place. The banks know, and they come to us.
Yeah.
But most of our sensitization are with this kind of lenders. Yes.
Rashmi, and here Jane has touched it. The existing institutions can, be used. Do you see in the fintech space, agent banking? Are there things like can be used to expedite this or these apparel systems?
Absolutely. There are fintechs who are already exploring it across the African continent and in Uganda. So let me give you a couple of examples, right? So fintechs are already doing uncollateralized lending. What they do is, because they have digitized your payments, if I'm running a small shop, a duka, you know that every day I'm doing 50,000 shillings worth of business because I've digitized it. So after 3 months, they're like, okay, on average, you do 50,000 shillings a day. It is okay to lend you, say, 1 million shillings because I will deduct it automatically from your digital payments. So they're doing some of that. And the other way is to also for them to come and say, what is your inventory, your stock value? That is also property that you own. And if it is not perishable, as Jane mentioned, if it's like long shelf life like Coca-Cola or others, and you're only asking for a 2-month, 3-month loan, they can give you credit against that inventory that you own. So it is very much possible for fintechs to use the small businesses and help revolutionize this.
Okay. There are situations like COVID. The world is also full of risks. And you touched it a little bit there, but we can delve into it a little bit. The risking the whole, this initiative, the risking is so that the lenders can come on. What kind of specific things besides just ordinary insurance can happen even at the policy level to try to de-risk? We are think tanking a bit. Rashmi.
Okay, I can take a shot.
Yeah.
One is the central bank has a limit. I cannot, sorry, apologies. I don't, off the top of my head, I don't remember. But there is guidance that every central bank gives to every financial institution on what percentage of your portfolio is backed by movable collateral versus immovable collateral. So we will need to work with at least if we're talking about formal financial institutions, we will need to work with them to see how do we reduce the risks? How do we make sure we have electronic KYC? How do we make sure all the data is going back to the CRBs so that the perceived and real risk is actually reduced? So there are a number of policy interventions that can happen and are in the pipeline. Now we come down to institutions like Madam Jane mentioned, which is the tier 4, which is your SACCOs, your MFIs, etc. A lot of them were already doing chattel-based manual, they were using the manual registry. So we can accelerate that process through the electronic system. Again, even there, at least a lot of the MFIs, they have branches or areas, they are where people are. They have a higher footprint than a lot of formal banks, and they have a more high-touch loan assessment methodology. A credit officer will come to you, to your home, so they will be
the families.
They know the families. It's a higher touch model. So as Madam Jane mentioned, those should be the right people to drive this. We should be working with them to say, how do we operationalize this? And of course, we have to make sure that there is financial literacy. There is a lot of emotional attachment to cows, to livestock. It is a very
absolutely, it's understandable.
It is a very emotional thing, and to lose that to a lender it's painful.
Absolutely.
So
So maybe just to add on to that,
yes, Jen,
our focus is that tier 4. That's because our issue is economic empowerment to the vulnerable groups. They are the majority.
Absolutely.
Over 90% of our businesses are SMEs. So that's our focus. And the issue is they're already used to this kind of people, first of all. But we're making it better for them now. Because as I mentioned earlier, microfinance, one of the institutions said, by the time you want to realize your money, you find that so many other institutions have lent to this person. But if they have the registry and they're uptaking it, we are working with UMRA on this.
Okay.
If they're in the registry, then it's difficult for any other person because their priorities are listed. The first to register, it has priority. Yeah, so that's our target, the tier 4. Tier 4. Because we are government. We're not working with the banks have to come because they have debentures. Those are movable properties, yes. So by default, they're going to be part. But our focus is tier 4 who are working with the vulnerable majority
Yeah.
of our population, to give them access to finance, to expand their businesses.
Who is going to bring those people, Jen?
Who is going to bring them?
Yeah, you see, we are talking about financial, and Rashmi spoke about the lenders. It's understood they will come, they have business sense. But even if they come, and you don't have the last mile, let me call it last mile, the other person on board, this system may not deliver exactly how you imagined. Who is going to bring that person? She talked about emotions.
We have a communication and awareness creation component, and this is one of it. We telling the public, but for the main targets, up country and all that, we actually go to them directly. And we, as URSBs, we're government. We have taken people to sensitize about financial literacy.
Yes.
How to make sure, the registration of businesses, we actually help them to register their businesses and sensitize them on how to ensure their registers are up to date. Yeah, and then we work with them. We work with them.
Sam,
Yes.
the question you asked, sorry, it got me thinking. It is a very important question on last mile, right? Because now see, if I have cows, let's say I have 10 cows, right? At some point, if you want to lend me money, somebody needs to go and verify whether they are cows in good health, because how do you value the, at what rate should you lend, how the value of every cow. So you'll take a picture, you have to tag it so that the cow doesn't disappear, and then you will register them either together as one loan that you've given, or every single cow. But that needs to be done.
It's a process.
It is a process that needs to be done. Is that going to be the lender? Maybe. They will have to then create mechanisms that allow for that. There's a cost component to that as well. Or it is an opportunity for new last mile businesses, fintechs and others to come and say, let's do that aggregation, that validation for you. You give us a commission and then we move forward.
Who gives the commission?
The lender.
Yes. That's a good, I hope people are listening here. That's a good space to go. Yes,
Okay.
Jane.
Maybe let me also mention this. It is in the wider plan of government, the use of this registry, both in the manifesto, the vision 2040, and it was also in our midterm middle income strategy. It's part of government process, and it's not just URSB carrying this out. Whichever relevant ministry and department and agency have their parts cut off. But this is a program government is taking the country to middle income status. And to do that, you start down there with the vulnerable people.
Absolutely.
So it is a deliberate, purposed program.
Yeah.
It's not just that we set up a registry and we're waiting to see what happens. No.
Okay.
We are deliberate about it.
You want to say something, Rashmi?
No, I'm
challenges. We have touched a few things here, but this program is not only for those who might use the system in terms of lenders or the borrowers. It also is for government, so to speak. Who are the champions?
Yes.
What are some of the challenges, let's start with Jen, you are dealing with now that are inhibiting you from going to the next level, really technically, as you sit in URSB?
Okay. Of course, the issue with the lenders is the risk. We have that roadblock to surmount.
Big cow in the room.
Yeah, that's the big cow in the room. The lender's interest is usually, how will I get back my money? We're actually at a workshop, and a money lender said, but madam, how am I getting back my money? By registering in the registry. So we have to break it down. And we have a cultural component of Ugandans who want to borrow but not pay back.
Old problem.
So there's a lot of sensitization and culture change that we need to go through. But we started. We had to start, and we are going to get there. I'm not saying it will happen in a year or two, but we will get there. Because we need this the vulnerable group, the youth, women, and SMEs to get access to credit. We need the lenders to be confident that I'll get my money back, and therefore the interest rates to be reasonable.
Okay. Rashmi, you have a take on the challenges. From the way you see it, she's an operator. You are an outsider. FSD is an outsider to URSB, and yet you have faith in SIMPLE, the acronym SIMPLE. You have faith in it, and that's why you're supporting it. However, from where you sit, what are the immediate challenges that must be conquered? You talked about the bringing on everybody on board, but immediately, what are the things we must overcome,
right,
to go to step 2, if you like?
Simply put, Madam James has touched upon it. We need to understand the lender's perspective. If they are not willing to lend against movable collateral, then nothing moves. So how do they perceive the risk? How do we work with them to reduce their own perception, de-risking that? If we are not able to work with them, then this will not move. So we want to work with the tier 4 microfinance institutions, money lenders, etc., but also with the formal institutions, so they can go ahead and lend. And there can be a strategy. We can start with productive assets, because people want your productive asset can be a boda boda, because you're a boda boda rider and you make money from that asset. The same thing from a sewing machine. If you're a tailor, it is a productive asset because that's where your money is. And you can begin with those strategies and say, how do we begin with strategies? Which are the different assets classes that you can start with? So, but the banks need to, banks and other formal institutions also need to say, let us start this process and let us investigate how other countries have done it.
Very good. Political will. You see, Operation Wealth Creation started to take off, and we're discussing it earlier with NADS and OWC. They were able to take off because the political will jumped in and realized that this is a vehicle by which we are going to get people out of poverty. And this one, as you explained, Jane, is in that direction. How critical is it for you? I know you may say, we have it. Do you have it?
Not only us, it's been taken up by the National Planning Authority as a key vehicle to bring about economic development. It's in NDP 3.
Yeah.
It's in Vision 2040. And we sat with them in the budgeting process. We sat with the National Planning Authority team.
Okay.
Because this product, where has it been all our life?
NPA is taking, you want to say something?
National Planning Authority.
No, we're not talking politics. We are just saying, you know how it is with when the political will is there.
Yes, and that is the sign of political will. Otherwise, they'd ignore it. We would ignore it.
But Sam, we have to also say, allow me to debate this point a little.
Please.
So you see, this is an excellent initiative. There is no question about that. And it is being driven from the top, and we are all very glad that it is. But there are also other components, because we need to understand why we are doing what we are doing.
Absolutely.
What is the end game, right? The end game is to increase access to credit. Is security the only reason? It is one of the biggest factors. But now let's take your perspective as a borrower. Would you borrow at 30%?
Crazy, I couldn't.
Right? You need to then go back and say, does my economic activity or the business that I allow, that I do I make enough profits to allow for that to go, to repay the debt, right? So then the question is, it was not just a problem of security. Am I getting affordable interest rates as well?
Okay.
And that is you cannot dissociate the two. Because you need security, but but the reason you are providing the security is so that you get credit at an affordable interest rate, matching the economic activity that you're in. And if we are not able to do that, we will not reach the end goal.
But
you have left us hanging.
If you remember, Sam,
I'm coming back to you, Rashmi, but Jen, yes.
If you remember, I mentioned earlier, I started with lenders. One of the reasons is to get the lenders comfortable that with your asset, the interest registered.
So they trust you.
There would be better trust because you'd have better monitoring of what is happening with the lending of that. And usually the main problem is there's multiple lending. And that's what creates that higher risk. Yeah.
And I'll come back to Rashmi on the issue of the cost of money. At this level, you're going to small people. And somehow maybe the lenders are getting money from a bigger person.
Yeah.
So they are also marking up.
Yes.
So you have let us hang and said the problem is there. Can we be solutionist to some extent? Does it lay in policy? Does it lay in destructuring our structural constraints?
So there are combinations, Sam. Let's not politicizing.
No.
So one is is there a financing gap? Yes. Is there enough market need if people say, I can give you money quickly and you will be able to convert that for whatever your need is? Yes, that is how payday lending grew in Uganda. There is so much payday lending that happens for the entire formal sector because the turnaround that you need money today, you get it, and then there's a way to auto deduct from your salary, right? So yes, there is that need, but there is also a larger need of growth of businesses, of economic growth. That's long-term financing. That requires investigation into, are you borrowing at a rate that you can actually repay?
It's a key question.
Right? Because there is lending happening in the country, absolutely. It is happening against land, it's happening against non-movable collateral. But even that rate is pretty high.
Yes.
So where is this risk premium coming from? Yes, there is information asymmetry because Rashmi could have borrowed from other 5 different SACCOs and other institutions that my bank doesn't know about, or they don't know whether Rashmi is going to repay, as Madam Jane mentioned. But there is also the floor at which interest rates are set, which is government borrowing.
Okay, I get it. Solution,
again, again also,
Jen, please, Jen, please.
Let's go back to our target group. We find SACCOs now at 2 billion and above. Those are the kind of people, and their lending rate is usually, because they are member based, their lending rate is more friendly. Yeah, so we are targeting these people who lend knowing that this money is going to this kind of person,
to the people,
and therefore the interest is not going to be very high, otherwise we'll not manage in this. And that's what we are trying to build up.
Okay.
The banks, yes, I've said they come because they have debentures and they have to register it with us. It's a law. But we are targeting those that lend to the non-titled vulnerable group.
Jane, what have you found out within your target group, especially now the SACCOs and the VSLs and the microfinance? What have you found that they requires, apart from your side, capacity-wise internally, to be able to fully operationalize security interest in movable property? Internally, have you found any things that you need to make interventions because they are key in this whole chain?
Repeat it.
Have you found any challenge, any gaps within the microfinance operators that need to be fixed so that this thing can take off properly?
It's I think call it work in progress. Remember, the microfinance have been working with this kind of people. The SACCOs have been working with the same people. Likewise, the money lenders. Only I think the money lenders have been a bit harsh, but now that they've come under tier 4, I think they'll be gentler. They know their people. They're the ones who are telling us the problem. Centenary Bank is one of those that is like from microfinance to big companies.
To bank, yes.
They have seen businesses start from borrowing as a microfinance component and grow into these big businesses. They've seen that. And I think they were one of the first banks to jump onto this on the movable property component, let aside the debenture, because of that. The issue is this business is small today. I'm just selling Rolex. I need just 500,000. But tomorrow I'm going to open a restaurant. Because and then the thing with the lenders, also the bigger ones, they train. We've taken about financial
that's a very
management.
Good intervention.
We as URSB have taken that on ourselves as well. Our workshops. The only problem now is probably COVID and all that. We had to stop, and you're not going to get everybody on Zoom.
No.
But we'd go right to the grassroots. We'd go with finance experts as well, and you train this person. This is how you open your business. This is how you sustain a business. When you get money, don't use it for school fees. That nature of basics.
Absolutely.
And then you find our focus. You find them coming up.
Okay, very good. Training, the training component.
Yeah.
And I think you need to interest FSDU in the training component.
We absolutely agree.
Yes.
Financial literacy is key.
They've supported workshops.
Yeah,
we have gone to the tail end of this program, and we need to wind up. Jane, you have many points. I saw you writing down. Can you make a final submission as we wrap up this? This needs to be explained again and again, because I don't think they get it the first time. Perhaps you may need even to translate it in other languages as you go, of course, going concern. Please make a final submissions.
Okay, thank you very much, Sam. First of all, the point of translation, I'm glad you brought it up. We have educational and sensitization material. Financial constraints, they're there, but we're slowly translating even the simple one into different languages. We'll usually choose, and we get problems. One language in the east, one in the west, one in the central is okay because it's just one language, one in the north and one in the south. So we start slowly like that, but hopefully with some more money, we'll get there. I think we need to understand the broader reason, the main outcome we're expecting from this. First of all, it's fully supported politically. It's part of the Vision 2040. It's part of the shorter term strategies of government. I know from 2020 we are going to move to, I think we've got another 5 year, the strategic development plan. It's very much part of it. As I said, National Planning Authority have come and sat with us about this product, because we understand that if we can bring up the businesses of the vulnerable, the youth, the women and the SMEs, not only will their businesses expand, but they also create jobs. And access to credit is very important for businesses to expand. And eventually, hopefully, even our rating with the World Bank will improve. Because credit rating is one of the parameters.
Doing business, yes.
But as government, the main issue is to bring this country to middle income status. And we know very well, you start from the people who are not yet there. The others may be there already, but the majority are not yet there.
Okay, Rashmi, final submissions.
Thank you, Sam, for having me. It was great having Madam Jane. We are very grateful to URSB for driving this initiative. It is absolutely necessary and it is a key factor for economic growth. Now, what we would like to see in the future is lenders, all types of lenders, formal and informal, to take up this excellent initiative. And we would like to work with URSB to create two types of pressure points. One, for incentives from the supply side, those who are providing finance, and then demand from the borrowers, saying that they have their rights, they know their movable property has value, and you can lend against them. That could be another pressure point. That requires awareness, financial literacy, and we look forward to working with them on it.
Okay, absolutely. Thank you very much, ladies. Madam Jane Okot Bitek, Deputy Registrar General for Registries in the URSB, and Rashmi Pillai, Executive Director, FSDU. We hope we tried to make it as less technical as we could. It actually is less technical in real terms, because when you have cows, you have a car, you have anything that moves that can be converted into value, you can use it to access money to put into your business. That's how simple it is. Thank you very much for joining us, and we shall engage you more in future on this issue, so that even if you're a small person, you can get some money from a financial institution or a lender. Thank you so much.